Hello, I'm Michelle Makori, and this is Kitco News. It's been a brutal week for Bitcoin, but my next guest believes despite recent headwinds from China, Elon Musk, and now an IRS crackdown, that Bitcoin still has new highs to hit this year. Robert Breedlove is the founder and CEO of crypto consulting firm Parallax Digital and a self-proclaimed philosopher in the Bitcoin space. Robert, good to have you with us here on Kitco.
Thanks, Michelle. Glad to be here.
Well, Robert, you got on my radar during my interview and conversations with personal finance guru Robert Kiyosaki, best known for his Rich Dad, Poor Dad series. And Robert told me that, of course, he buys gold and silver, but that he also buys crypto, and that you are his go-to guy when it comes to all matters crypto. So I wanted to give your insights to our viewers directly. And I want to start off by getting your thoughts on the volatility we've seen this week, now compounded by news that the IRS will be intensifying its attempts to tax crypto, that all cryptocurrency transfers over $10,000 will now need to be reported to the IRS, and that the Biden administration wants an extra $80 billion to boost resources at the IRS for the crypto and tax evasion crackdown. So what do you make of this news?
Yeah, I think that when an organization is suffering heavy losses or a deficit, as the U.S. government is, in addition to being cripplingly indebted, that the number one action to take is to increase your revenue. So it makes sense that Biden's administration is seeking to increase capital gains taxes. I would also expect them to be increasing property taxes at some point, real estate property, given that it's the one asset that really cannot be concealed. And I think, too, that, the crackdown itself is just an analog institution trying to deal with a radically disruptive technology. Bitcoin itself is not a network that is going to conform to any jurisdictional law whatsoever. And that's what makes it so important, frankly, is that it's the one monetary network we've ever had in history that does not respond to coercion or force. So try as they might, I'm sure, the US government in all its wisdom will gradually adapt to the Bitcoin network, find a way to monitor and tax the transactions as best that they can. But in the long run, as we can get more deeply into, I see Bitcoin as fundamentally disruptive to gold, and government and central banking itself is an apparatus built on top of gold. So I do think that this wave of innovation is massive, and it's something that it's very difficult for us to even comprehend in our worldviews, its long-term repercussions.
All right, well, let's focus then on the long term, provided we consider about a decade out the long term. Because you told Robert Kiyosaki about a month ago that in 10 years' time, in 2031, you see Bitcoin at $12.5 million, but with an inflation-adjusted value of around $1 million, meaning the current purchasing power of $1 million per Bitcoin. Do you maintain that outlook?
I do maintain that outlook. And this is based on percentage expansion rates of money supplies historically. So the United States expanded into over 30% last year. And it's easy to forget, and mankind has forgotten this repeatedly throughout history. It usually takes a few generations each time, that the expansion of the money supply is governed by a law. It's called the law of accelerating issuance and depreciation. So the more money you print, the more money you ultimately later have to print just to keep the system going. So I do expect the expansion of USM2 to double again, probably in the next 4 years. And then I expect it to double again from there. So we'll be north of 100% USM2 expansion annually by the end of the decade. At the same time, because money has this centripetal network effect, we tend towards one. That's what gold was. That's what the US dollar is. I do expect a lot of the weaker international currencies to collapse into the dollar during this transition. So I would say that global M2 today is about $100 trillion. USM2 is about 20 trillion. So it's roughly 20% of that. I would expect USM2 to expand to be about 40% of global M2 by the end of the decade. But global M2 itself will have expanded from 100 trillion due to this law of accelerating issuance and depreciation to about 1.25 quadrillion, which is $1,250 trillion. And in that time as well, I expect Bitcoin as essentially the ultimate irrepressible non-counterparty insurance policy against central banks to appreciate in tandem. So I think its purchasing power will increase to $1 million in 2021 purchasing power. But by that time, due to the expansion in the money supply from 100 trillion US M2 to 1,250 trillion M2, Bitcoin will actually be nominally valued at $12.5 million US by the end of the decade. Further, at that point, currencies tend to start hyperinflating. So I actually think fiat currency globally will be collapsed by the mid 2030s.
All right. So certainly no disagreement, I think, in terms of the expansion of the monetary supply, the M2 out there, and certainly the inflation concerns and the debasement of fiat currencies. But what makes you so confident still that Bitcoin is going to be the solution here?
Bitcoin has introduced properties of money that are as close to perfect as the world has ever had. And so what I really challenge people that are skeptical of Bitcoin to do is to ask themselves, first of all, the question, what is money? And then secondly, why was gold selected by the free market as money? Why has gold stood the test of time for over 5,000 years? What are the properties of gold that caused it to be selected? And if you do that digging, you do that homework, you're going to end up very deep into Austrian economics at some point, which is the cumulative wisdom of humanity on economics. And it stands in counter-distinction to Keynesian economics, which I would classify more as central bank propaganda. And gold and money in general is essentially selected based on 5 properties. I've covered this a lot in my work. They are divisibility, durability, recognizability, portability, scarcity. I won't expound upon them here, but feel free to dig some into Austrian economics or check out my work to see why. And essentially across those 5 properties of money, Bitcoin has perfected them in a way that the world's never seen before.
Well, Robert, the question is whether you can still make the case for Bitcoin as a store of value with the extreme volatility that we've seen just this past week, with one person having such an impact on the market, one tweet from Elon Musk sending crypto markets down or up by double-digit percentages. Can we really say that an asset or a currency with so much volatility is a store of value? Because that's been one of the concerns raised this week with the crazy volatility we've seen.
Yeah, I would say a couple of things about that. Firstly, volatility is a natural function of price discovery, and it tends to contract as market cap expands. So that's inversely proportionate to market cap. We've seen that pattern play out with Bitcoin, that its volatility is actually contracting. And secondly, as a store of value, it really comes down to how you define a store of value. So Bitcoin is an asset that's monetizing in real time. Call it $1 trillion market cap at 60,000 per Bitcoin. It's more like 700 today. It's competing for a $250 trillion marketplace, which is global store of value. So it's very nascent relative to its total addressable market. But what's unique about Bitcoin in terms of sort of a secondary definition to a store of value is how much of the total supply can I own? What are the assurances that I'm provided of owning a guaranteed fraction of the total supply? And historically, gold was the technology which best satisfied this store value property. You knew with utmost certainty that whatever portion of the gold supply you held, you couldn't be diluted by more than roughly 2% per year. Bitcoin offers us something radically new. It's a money premised on perfect information. If I hold 1 million Bitcoin, I have 1 million of 21 million possible forever. No one can ever change that again. So it's perfect inelasticity of supply, and that is the property that market actors seek in a store of value. So Bitcoin has perfected the store value function of money.
So going off your reference to gold, and gold has proven that it is a store of value over thousands and thousands of years. It has stood the test of time. But gold has also been used as a payment method, as a currency, from gold coins to gold bars. Transactions have been made for goods with gold. So does it matter if Bitcoin never takes off as a currency, as an actual form of payment? I mean, Elon Musk saying he no longer accepts Bitcoins for Tesla payments, and governments from Turkey to China saying it can't be used for transactions. So how does that impact the long-term viability of Bitcoin if it never really becomes a currency?
Well, the evolutionary path that gold followed was that it was initially a collectible, really adored for its beauty, and people could adorn themselves with it. Eventually, it became a store of value, and that as societies began to trade, this became one of the most liquid assets because it satisfied monetary properties. It was only later then that when it started being used in trade widely, that it became a medium of exchange. It became a denominator of prices. And then finally, it becomes a unit of account. So people actually start to think in the money that they're trading with most widely. Bitcoin's following a similar path of monetization. And today, I would just say that we're early in that store value phase. So ultimately, no one needs to jump the gun. We don't need to start using it as a medium of exchange immediately. The incentives for Bitcoin, it's an accumulation game or a land grab. You want to take as much territory on this absolutely scarce monetary network as you can and hold it until a certain market capitalization is reached that has incentivized you to go and want to spend it. So that's the path it's following. It doesn't matter if Elon wants to accept Bitcoin for Tesla or not. That has no impact on Bitcoin's success.
But does it matter if it never actually takes off as a currency, as a viable means of payment? And that's the case that Fed Chair Jerome Powell made today. Now, granted, he may have other incentives to discount the currency aspect of Bitcoin. But for your projections of Bitcoin reaching that $12.5 million price tag in 10 years' time, does it matter if we don't actually ever use Bitcoin to purchase things, be it cars or a cup of coffee?
No, the free market incentives take care of themselves, actually. It's the reservation demand when someone's choosing to hold Bitcoin for whatever reason, taking it off the market, that actually creates upward pressure on its price. And then those individuals that enter the market properly at the right price point, as the market cap grows from that reservation demand, they have increasing unrealized gains built into that position. So there's an increasing incentive for them to go and spend over time. So I'm not concerned at all about it being ultimately used as a medium of exchange. I think it's a natural progression of money. The difficult thing to understand for people is that we've only seen one asset monetize in this way, and it was gold. And it took thousands of years. Bitcoin, being on a digital, epistemic playing field, is just happening much more quickly.
So looking at the volatility that we've seen this week and some areas for concern, Elon Musk, we've covered that he doesn't want to accept Bitcoin, but that's also linked to his views that it's no longer seen as environmentally friendly. On top of that, we had China saying that they're going to ban the use of currency transactions. Then, as I mentioned, we heard from the Treasury that the IRS is going to get more aggressive on the tax side. The government of India is saying it may form a panel of experts to examine regulating cryptocurrencies. So when you look at all of these factors together, what is your near-term outlook for Bitcoin?
Yeah, I would say, frankly, we've seen almost everything you just said could have been said equally 4 to 5 years ago. Every time we're in a bull market, every regulatory agency in the world wants to come out and say they're doing this or that to control Bitcoin and tax it or what may have you. But ultimately, it's just Bitcoin is a game that plays by its own rules. So it's going to bend all of the regulators around it over time. And as far as the short-term outlook goes, I think we are 12 months into the bull market, frankly. So historically, the Bitcoin halving triggers a bull run that persists for about 12 to 18 months after each event. So the last halving, in which Bitcoin's inflation rate was cut from 12.5 Bitcoin to 6.25 per block, was in May 2020. Historically, I think it's roughly 510 days after the halving event, we the market tends to put in a new all-time high price. So that would put us around mid-October, kind of early to mid Q4 this year for an expectation of a new Bitcoin all-time high price. I had a model posted. I think it's still published on Twitter 3 years ago that we called the next Bitcoin peak at $244,000. I modified that model after COVID because I also think that the inflationary pressures on the US dollar are going to become especially pronounced roughly 18 months after the printing began, which just so happens to fall right in line with the next Bitcoin price peak. So I think we could break $300,000 in this market cycle. And at that point,
when you say this market cycle, what do you mean by that? Give me a more specific time period.
This is Bitcoin's fourth market cycle. So it's had these huge run-up peaks. The last one, say it bottomed in July 2015 at $200. Over the next 29 months, it ran up 100x to 20,000 in December 2017. That's really when it got on the global radar. And then it had a drawdown of 84% to about 3,500 in December 19. That was the third Bitcoin market cycle, which was again mapped onto its halving. Every time its inflation rate cuts in half of the supply available on the market to be sold by miners is reduced by half. So holding demand constant, price goes up. But of course, the market's constantly overshooting and undershooting its actual value. So, running numbers on those figures and looking at Bitcoin's hash rate, which is the energy being allocated to secure its network, I think we're on target to break $300,000 this year.
This year. So that's your target, $300,000.
$307,000. Yeah, that's our current model price.
307. I like that. I like that specificity. That's very exact.
You got to listen to the spreadsheet.
Okay, well, we do listen to you, and I certainly have listened to a number of your podcasts, and I've enjoyed them tremendously. You refer to yourself as a freedom maximalist, a Bitcoin philosopher, if you will. And you say that Bitcoin is fundamentally a humanitarian movement exposing the greatest con in human history, and that's central banking. Now, if I may try and synthesize some of these views, you say that fiat currency is essentially a pyramid scheme designed to take wealth from some and give to others, that printing money at the rate that we are is in fact a form of slavery, and that central banks have a legal monopolistic license to steal human time. And that got me, stealing human time by creating more and more money. So for the benefit of our viewers who do not necessarily have the hours and hours and hours that I did to listen to your podcasts, can you break down and crystallize that philosophy for us?
Sure. So, freedom maximalism is just premised on really the foundational principles of America, which is just this natural law or right to life, liberty, and property. And anytime government steps beyond that, it's not good. It's a net detriment to humanity. And the one, we pride ourselves in the US sort of as being these free market capitalists. And it's become an ideology that's permeated the world. Even in more authoritarian regimes like China, they've adopted free market principles, realizing that it's more creative of wealth, more generative to wealth. However, the one market in the world that has never been free, never been allowed to just have natural price discovery and technology selection is the market for money. The closest thing we've ever had was kind of this geopolitical gold standard in the late 19th century. And money, to make it very simple, I say it's just money's a tool for trading our time, right? We sacrifice our time to earn money, and then we redeem that money for commensurate sacrifices from others. And it's this intertemporal social contract we have with one another that we negotiate through money. But when you monopolize, you put a monopolized institution on top of it, which is the central bank, and they have absolute and arbitrary authority to increase the money supply at their own whim and dole out the proceeds of that money to whomever they select. They are effectively harvesting the economic surplus off of the productive economy. So every ounce of energy, blood, sweat, and tears that people are putting into sacrificing to obtain these dollars, there's a single institution that can produce them with no sacrifice, no effort to dilute everyone else. And in that scope, we could just say that money, See, for instance, like a stock certificate is title to company capital. We could say that money is title to human time, effectively. So if there's one institution that can just spin these titles up and they just can suck property rights out of the marketplace and into their own pockets, they're stealing human time. And I struggled for a while with, what do you call that? I've called it an institution of systemized time theft, but I don't know what else to call time theft other than slavery. It's not visceral. It's not, people are in chains and there's whips on the back necessarily, but because of its invisibility, it's perpetrated at a much larger scale. And I've written about this in a lot of my work. So I hope that people will come to see it's a demystification of money, that it's just an emblem of our time, and that the market should be allowed to decide which technology is best, not a monopoly.
All right, but if, to your point, central banks have this legal monopolistic license to steal human time by creating more and more money, why would they give that up? Because to me, that is the biggest challenge to Bitcoin or any other cryptocurrency, that the central banks around the world are not just going to give up their monopoly. How do you dispel the concern that authorities are going to intervene because they don't want to give up their monopoly?
I don't think they're going to give up their monopoly. I think
so. How does Bitcoin survive then?
I think at some point, if it already hasn't occurred, perhaps with some central banks, that game theory essentially forces them to buy Bitcoin, even as an insurance policy against its success. So as soon as a central bank, for instance, determines with even a 0.1% probability that Bitcoin could represent an existential threat to their business model, they now have to begin acquiring part of the network to protect themselves in that eventuality. If that plays out, they need a hedge against its success. And when central bank A does this, then central bank B, running the same calculus on a higher market capitalization Bitcoin, now decides they need to put 0.2% of their assets into it as a hedge against its success, and so on and so forth. Ultimately leading to this, reverse bank run on Bitcoin, where you have the lenders of last resort worldwide printing money to acquire the only absolutely scarce money that's ever existed. I think you'll also see it in terms of hash rate, because there's this anywhere that there is a source of energy not being monetized or a source of energy being curtailed due to grid congestion or intermittency, there's a direct financial incentive to turn that excess energy into digital gold, into Bitcoin. So it's going to spin into this just frenzy of accumulation. This game theory that preserves the integrity of Bitcoin and the proliferation of its network. It operates at every level, the individual level, the corporate level, which we're seeing play out now, by the way. A lot of publicly listed companies buying Bitcoin. The next phase, which I think will probably play out in the mid-2020s, will be at the geopolitical level.
So FOMO, basically, is what you're saying. FOMO, fear of missing out by individual central banks.
Darwinian
companies.
Self-preservation.
Okay.
You have no choice but to buy Bitcoin to preserve your wealth over time.
All right, but dispel the concern that authorities are still going to fight it, that they're going to use various premises to crack down. One that is being developed, as we discussed, is that it's environmentally unfriendly. But more specifically now, we're getting this idea that Bitcoin is used for nefarious illegal activities. For example, the Colonial Pipeline confirmed that it in fact paid over $4 million in ransom to the cyber criminal gang responsible for taking the US fuel pipeline offline using Bitcoin. Reportedly, that payment was made in Bitcoin. And there's concern now that governments will use examples like that as a guise for more regulation, for more intervention. What do you say to that?
I completely agree. The fact that they're talking about a $4 million crime that was perpetrated in Bitcoin, but ignoring the hundreds of billions of dollars in crime that are perpetrated in the US dollar speaks volumes to me. At the end of the day, it's a tool, which money is just a tool. It's amoral. It doesn't have a morality of its own. You can use a tool to build something constructive or to do something malevolent. And I think trying to categorize Bitcoin as a criminal money, frankly, it's really ignorant of its properties, because Bitcoin, it's pseudonymous. It's not anonymous. It doesn't exactly lend itself well to criminal activity. And I do agree, though, that this narrative will continue to be used to disparage Bitcoin. However, I ultimately just don't think it's going to hold water because the narrative is simple enough for people to understand eventually. It takes maybe a few more years. But this is simply a free market emergent technology, much like the internet itself. People will find great utility in it. People will find shelter from inflation and its ramifications over the next 10 years in it. And when there's enough demand for something, I just think government resistance starts to falter. As they say that there's no government that can stay unpopular for long. So yeah, I think Bitcoin is just a very useful tool that government is really impotent to stop.
Resistance is futile, is what you're saying.
That's right.
You're also saying that, of course, money needs to have durability, divisibility, and scarcity. Would a Bitcoin derivative market impact the scarcity? Would Bitcoin ETFs and now this idea of micro Bitcoins impact the scarcity notion? And would the idea that you have paper Bitcoin, like you have paper silver, if you will, impact the scarcity element?
Yeah, it certainly can, especially in the short run. The one big advantage Bitcoin has here, well, I guess two advantages. One is you can very easily, at low cost and with low effort, cryptographically prove your reserves. You can do this as an individual or as an institution. And you can also settle with finality 24/7. It's much more portable than gold. So we don't need as many layers of trust and highly complexified debt and credit markets to transact in Bitcoin, frankly. And there's another element too that's a bit more advanced, but you can custody Bitcoin in multi-signature schemas. So you can actually custody an asset without counterparty risk. And this is very commonly only done mostly at the individual small business level today, but I could see a world where institutions become counterparties to a multi-signature agreement. So instead of just putting all your money with Goldman or JP Morgan, maybe you chop your key in two and give them each one of three so that you don't have to trust any one counterparty, but you still have secure custody.
All right. Finally, for all of our viewers that have been a tad panicked with the volatility this week, can I safely assume that you've been buying the dip?
I buy Bitcoin every single day and I never sell. So it's a simple strategy, gives me a lot of peace of mind, and it's done pretty darn well. So
diamond hands, I believe, is the term for it these days, right? That's what the cool kids are calling it. Diamond hands, holding on to your Bitcoin.
Diamond hands and laser eyes. The internet is eating the world.
All right, Robert, thank you so much for joining us. Robert Breedlove, Bitcoin philosopher and CEO and founder of Parallax. Appreciate you joining us here on Kitco News.
Thank you, Michelle. Glad to be here.
And thank you for watching. Keep it right here.